Bismillah ar-Rahman ar-Rahim. Assalamu alaikum, students. As you know that in the last class we have discussed the some accounting principle and concepts like business entity concept, uh, historic cost concept, money measurement, going concern, consistency, prudence concept, realization, duality, and materiality concept, and then objectivity, matching accrual concept. Okay. And I gave you the some questions to solve, and the last that is the substance over form. Any question regarding this? You can ask. Then we move ahead. And this was your homework. You have to be solved from question 1 to 15. Have you done it? Uh, and the above 116 to 20 uh, was your homework. Uh, Okay, then we started the chapter number 1.3, accounting for non-current asset related to a depreciation. We have discussed the revenue capital, the difference between revenue income, revenue expenditure, capital income receipts. After that, we have discussed the changing value of asset. We know that the cost of asset includes all the costs. Then we have discussed the some depreciation method. Then why depreciation is necessary? Because due to some reason, that is the physical deterioration, obsolescence, usage of assets. So we have to discuss to calculate the depreciation method, that is the straight line method, reducing balance method, uh, and in the last we have done at this level at this point. So we learned that how to calculate depreciation by using straight line method. So this is the method to calculate depreciation. So now in this class we will start how to calculate depreciation by using the reducing balance method. Okay. This is your homework. This was your homework. This was your homework. I think so. You did it. Okay. Have you done it? This one question. Okay, then start to calculate depreciation by using reducing balance method. Okay, so remember one thing while calculating, while using a reducing balance method. So normally, usually in reducing balance method, residual value is not given in the question. So in residual balancing method, reducing balance method, residual value is not given in the question. So in residual balance method, no need to calculate residual value. Normally, we calculate depreciation by using a reducing balance method in percentage form. We will calculate depreciation by using depreciation rate. If depreciation rate is not given in the question, we can make a formula to convert the values into the rate. Okay. Later I will show you by using depreciation rate. So we assume that the depreciation rate is 10%. 10% depreciation rate. So the asset will depreciate as per 10%. Okay. Uh, Now start. So here is the question. Here is the question. Cost of asset like this. Cost of asset is 10%, 10,000, and the depreciation rate is the 10%. We have to depreciate for 3 years. Depreciate asset, find the requirement is calculate depreciation, calculate depreciation for 3 years, for the 3 years. Okay. So we are going to calculate depreciation for 3 years. Okay. So at the year one of, we assume that year one, starting of the year, that is the first gen of year one. So the cost is 10,000. So this is the 10,000. So at the end of year one, that is the 31st December year one. So we have to calculate depreciation after passing a year. So the depreciation is, we will calculate depreciation on this amount. So depreciation is after the adaptation is can be calculated by 10,000 into 10% is the depreciation rate. So here is the answer will be the $1,000. So what's the carrying amount at the end of first year? So here is the carrying amount. Here is the carrying amount. The another name of carrying amount is, written down value. You know that. So here is the carrying value. The another name is written down value. Somehow it's also called net book value. So what's the net book value? That is the 9,000. Now we will calculate the depreciation of year two. So at 31st December year two, at the end of year two, so again calculate depreciation. Now in reducing balance method, we have to calculate depreciation. We have to calculate depreciation on carrying value, on carrying amount, not on the cost of asset. So there is a as per straight line method, we have to calculate depreciation always on cost. So the depreciation amount in straight line method remains same at every year. But in reducing balance method, we will calculate depreciation not on cost but on the carrying value, but on the reduce WD, written down value, or the net book value. So we will calculate depreciation on 9,000, not 10,000. So we will use a WDV amount, written down value. 10% of 9,000, that is the 900. So what's the carrying amount at the end of second year? 8,100. 8,100. 8,100 is the carrying amount. Now at the third year, that is the 31st December year 3. Now again calculate depreciation. Now we will calculate depreciation on 8,100. 8,100. 10% of 81, that is the 810. So if we subtract 810 from 8100, then the carrying amount at the end of third year. So here is the written down value, also called carrying amount, and also called net book value. What's the value? Yes, can you tell me? Okay. So this is the carrying amount at the end of year 3. So can you compare the depreciation method, uh, reducing balance method to straight line method? So the carrying amount in straight line method at the end of third year, this is the third year. At the end of third year, the carrying amount in straight line method is 7,600, while in reducing balance method, the carrying amount at the end of third year will be 7,290. So the asset depreciate more uh, in reducing balance method as compared to the straight line method. Okay. So this is the depreciation method to calculate depreciation in reducing balance method, and this was the method to calculate depreciation by using the straight line method. Okay. So this is your homework. You have to solve this question. So this is a little tricky question, not a normal one. At first, Jen, for example, 20, at first Jen 20, uh, cost of machine, cost of machine was 20,000. Uh, total depreciation, total depreciation on that day, total depreciation on that date was 5,000. Depreciation rate, depreciation rate depreciation rate is 15%. This is the requirement. This is the requirement. Requirement is uh, calculate the calculate the depreciation expense for year 2022 and carrying amount. Depreciation expense and carrying amount for the year for the year uh, 31st December 22. Okay. So this is your question. Okay. For the year ended 31st December 20. So this is your homework question. Okay. You have to solve it. Can I explain this question or have you understand this one? Can I explain more if you have? Okay. Just tell me the answer. You have to start your depreciation uh, from rupees 10,000, 20,000. You have to calculate depreciation by using 20,000 amount, 25,000 amount, or a 15,000 amount. Just tell me which amount you have to select for the depreciation. 20, 25, 15. If you select the wrong amount, your whole question will be wrong. So which amount you have to select for depreciation among these three? Yes, Hamid, what's your opinion about this? No, dear. I tell that in reducing balance method, we start calculate depreciation not on cost but on the written down value. So depreciation, uh, because this is the first year of the asset, so we uh, deliberately We deliberately start from the cost. But in this question, it was not the start of an asset. We already bought an asset 2 year ago, some year ago, at first January 20. The cost of machine was 20,000. Total depreciation on that date was 5,000. So here we can calculate the WDV of this amount. So the WDV is cost minus depreciation. Cost minus the total depreciation, also called is accumulated depreciation. The concept will be discussed later. Okay. So we have cost 20,000 and the depreciation already given on that day. So on that day, total asset is depreciated by 5,000. So we will subtract 5,000 from 20,000. Here is the asset on first Jan 20 is the 15,000 is the written down value of the asset. So we calculate depreciation on 15,000, not on 20,000. Okay, because this is not the first year of a asset. Okay, if first year of an asset is given, then we will start from the cost. Then afterward, every depreciation will be calculated on the written down value amount, not on cost amount. But if we bought assets some year ago, so that later year will not be the cost year. So if we depreciation from the later year, we will start from the WDV amount, not on the cost amount. Okay, got this point? Okay, now move. Yes. If this line was not given, if this line is, assume that this line is not given in the question, assume that this line is not given in the question, so it's mean we have to buy asset. We bought asset on first Jan 20. So we will start depreciation from 20,000 because asset never depreciate yet before. Okay, so this this line indicates that the asset depreciated in the past event. So 5,000 is the depreciation amount of the previous year. Okay, so this amount indicates that uh, we will not calculate depreciation on 20,000, but calculate on the 15,000. So this is the work example 3. Tanya purchased delivery van for $18,000. Tanya financial year required prepare a delivery van account, provision for depreciation account, statement, profit and loss extract. Okay, we will talk about extracts on later. Okay, so don't worry about the extracts. Okay, let's solve a comprehensive question related to depreciation. Just me. So you have to solve this one. This is the easy example of depreciation. So this is your homework. Don't worry about the general entries now. We will solve general entries or learn general entries at the end of the topic. Okay. So don't worry about at this level, at this stage. Now solve the work example 5. Now you solve this. Okay. So in this example, after solving this example, example number 5, we will automatically solve the example number uh, 3 as well. Okay, 3 as well. So example 3 is the lighter one. So you have to solve by yourself once you have done the example number 5. Okay. So the example number 5 I will solve. Then you can solve this one. Okay, students. Now start this one. Example number 5. Okay. In example 5, SW purchased a machine on 1st January 21 for 6,400,000. Depreciation is to be charged at 20% per annum using the reducing balance method. So we have already discussed that reducing balance method normally calculated in term of percentage form like this 20%. As financial year end is 31st December, so we have to require to prepare a machine account, provide for depreciation account, statement of profit and loss extracts, and the extract to the financial position for the year ended for the 3 year. That is the year 21, year 22, and year 23. Okay. So first of all, we have to make a machinery account. Uh, Please give me a suggestion that either I make a separate machinery account by myself like this one, or can I explain from this answer? This already have account, already made it. So just give me a suggestion. Okay, student. Let's make the machinery account first. Okay. So first of all, we have to make the machinery account. So this is the machinery account. Okay. Uh, so SW purchase machinery $64,000. So what's the double entry of this purchasing machine? What's the double entry of purchase machine? It's mean machine debit and cash credit. It's mean machine debit and the cash, or you can see the bank credit. So in the machine account, we will write 64,000 on the debit side. So 64,000 on the debit side. Against you can write a cash or you can write a bank. It's up to you. Okay. So this is the machinery account. So we have to purchase one asset. So in the machinery account, machine is an asset. So we have to open a non-current asset, that is the machine account. Okay. So this we have done this. Prepare a machine account. We have done this. Okay. So we have to maintain the machinery account on 1st Jan 21. That is the date of the transaction. So the B requirement is provision for depreciation of machinery account. Now we are going to open a provision for depreciation, and we know that according to the statement we have to prepare extract for the 3 years. So we will open a depreciation provision for depreciation account for the 3 year at least. So the next account will be the provision account, provision for depreciation. Provision for depreciation account, provision for depreciation account. And the third one account, that is the depreciation expense account. This is the depreciation expense account. Normally, we open the three accounts in the depreciation. Okay, the number one is the fixed assets account, fixed asset account. Second one is provision for depreciation account, and third one is depreciation expense account. depreciation expense account. Okay. So what is the purpose of opening the provision for depreciation account? So the provision is nothing but the contra of an asset. So provision for depreciation, the concept of provision is nothing. It's just a contra assets or the opposite of assets entry account. So if we are going to decrease our asset, so we are upon the provision for the asset. So this provision actually indicates that the value of assets is decreasing. So the actual reality of provision account is nothing. It's just a opposite to, you can say this, opposite to asset account. So it's a contra asset account. It's a contra asset account. It's mean where we show the decrease of an machinery account. So we can see this in the provision account. So provision for depreciation, or the other name of the other name of this account is the accumulated depreciation. Accumulated depreciation. Then another name of this amount. Okay. So this is the provision depreciation. Also, sorry. This is the provision for depreciation account, also called depreciation expense account, and this is the accumulated depreciation account. Accumulated, the word accumulated means total depreciation account. Accumulated depreciation account. So the accumulated depreciation actually the contra asset account. Okay, now let's start. So the first year we will calculate depreciation, that is 20%. So if we solve this question in a straight form like this one, first gen 21 cost of machine, that is the 64,000. So at the year end, that is the 31st December 21, the depreciation rate is the 20%. So we'll calculate depreciation, that is the 64,000 into 20%. So what's the depreciation expense? Yes, student, can you tell me? Well done. 12,800 is the depreciation expense. So there is the carrying amount. So carrying amount at the end of first year will be the, so what's the carrying amount? Yes, 51,200. Now just to calculate depreciation for the next year, that is 31st December 22 depreciation. To calculate depreciation on the carrying amount, so we will select 51,200 into 20%. So what's the depreciation expense? 10,240. So we again subtract this one from the carrying amount, and the carrying amount of the second year will be the, yes, is 40960, and the last adaptation for the third year, that is the 31st December 23, the depreciation will be the carrying amount 40960, and the depreciation rate is the 20%. So here is the depreciation expense. Yes, 8192, and here is the carrying amount at the third year. So what's the value? 32,768. So this is the whole calculation which we have done. Okay, so now transform this calculation to the accounts. Okay, so in accumulated depreciation account first, okay, uh, actually this is not the requirement for our question, okay, to make accumulated depreciation account. So see the question, they said that just calculate the machinery account and depreciation expense account. So here is not the requirement is given that you have to prepare or make the accumulated depreciation accounts. So this is the whole criteria which we have are discussing, that normally we are making three types of account. Number one is fixed asset machinery account, and this is the requirement number B, provision for depreciation account. But usually I am also teaching you how to make or prepare the accumulated depreciation account too, okay. So from this one, at the first year, the depreciation will be the 12,800. So we will record depreciation. So what's the double entry of depreciation expense? So the depreciation expense will be, the entry of depreciation expense will be the depreciation expense debit, uh, accumulated depreciation credit. So the entry is, the entry of this one is depreciation expense debit, accumulated depreciation expense credit by 12,800. Here is the 12,800. So this is the double entry. Okay. So we will record this double entry into our these two accounts. So the depreciation expense is the debit. So we will record 12,800 on the debit side of depreciation expense account. That is here 12,800. The reference is cumulated depreciation. And in the cumulated depreciation account, we will record 12,800 on the credit side of accumulated depreciation account. Okay. The reference is, we are making these two account for the purpose of just clarification of an asset behavior, how asset is behaving like depreciation year to year. Just give me a moment. When I complete this all the accounts, then I will tell you the reason of making this accumulated depreciation account. We can skip this, although we don't have any need to prepare this one, but in the later advanced question we need to open this account too, okay. This account will help us to cater the difficult questions related to the fixed asset. So in from starting, I have to make sure that you have to learn this account too, okay. Although we don't have any need to prepare this account right now, but I want to, you have to learn this one too, okay, with depreciation expense account, okay. So at the year, at the year 2, the depreciation expense will be the, oh sorry, this one, the depreciation expense of year 2 is 10,240, 10,240. So what's the double entry, journal entry of this depreciation expense? So the depreciation expense is debit by 10,240 and accumulated depreciation expense credit by 10,240. So again, we will record this. Remember one thing, the accumulated depreciation is the contra asset account. So we will never close it. Okay, because the carry down of 1 year will be the brought down of 1 year, second year, next year. But the depreciation expense we have to close yearly. Depreciation expense account will be the close yearly. Okay. So now close the depreciation expense account. So if we close the depreciation expense for the year one, so this was the year one. So if we close this account, the amount will be the 12,800, and here is the 12,800. So where can I write the balancing amount? So the balancing amount can be right at this side. So this balancing amount will go to the profit and loss account. So this is the balancing amount that will go to the profit and loss account. That is the 12,800. So this year one account is closed now. So now close the accumulated depreciation account. So the total will be the 12,800, and here is the debit side 12,800. So the balancing amount we will write at this side, because the credit side is heavier, so the balance will be here. So this balance is called the carry down balance, that is the 12,800. So this carry down balance of year one, so actually this is the year one calculation. So the carried on balance of this year one will be the brought down balance of the next year. So this CD will become the BD of the next year. That is the 12,800. And this is if we close the machine account, if we want to close the machine account too, so the machine account closing will be the, so here is the closing balance, that is the carried on balance of the machine, that is the 64,000. And at year one we have closed the all account. So we have closed the machine account, the closing balance of machine account is 64,000 at year one. The total depreciation of machine is 12,800, and this depreciation expense show the depreciation expense for the year, for 1 year only. So this account shows the depreciation of 1 year only, shows 1 year depreciation only. And this accumulated depreciation account will tell us the total depreciation, will tell us the total depreciation, total depreciation of an asset till the date of purchase, from the date of purchase. So this is the all closing entries of the year one. So now move to the year two. If we talk about the year two, that is the 31st December 21. Now we will go toward the year two. Year two, that is the 2021 is the year two. So this closing will be the, this CD will become the BD of the next year. So the next year, the cost of machine again, that is the 64,000. There is no addition or deletion in this machine account, and the accumulated depreciation is the Browden 12,800, and there is no BD in the provision for depreciation or depreciation expense account. Okay, you have to just look at these three accounts, then we go ahead. Okay. Okay, next move to the second year. So the depreciation expense for the second year will be the 10,240. So in depreciation expense, we will debit 10,240. So here is the depreciation expense. We will debit the 10,240, 10,240, and the reference of this will be the accumulated depreciation expense. So here is the reference is accumulated depreciation, and the accumulated depreciation account is credited by 10,240. So here is the accumulated depreciation, that the it is credited by 10,240 against the against the reference of depreciation expense. So we have to close this. So this BD, again there is no change, there is no addition or deletion in the machine account. So this BD again will be the CD of the year 2, that is the year 22. So 64,000 is the closing balance again. So now this is the closing of year 2. And now this accumulated depreciation is tell that we have total depreciation. The opening depreciation is 12,800. It's mean at year 1 the asset depreciated at 12,800, and year 2 here is the new depreciation, that is a 10,240. So we have to add up, and here is the carry down balance of the accumulated depreciation account. So you have to add this and tell me the answer. So the answer will be, I think so, 23040, if I am not wrong. So here we close the accounts. 23040, 23040. And now close this account to the deduction expense. So the deduction expense is closed, and there is no carry down, brought down in the depreciation or provision for depreciation account. So the all amount will goes to the profit and loss account. So the balance amount will go to the profit and loss account, that is the 10240. So here we can close the accounts, that is the 10240, 10240. And here is the last account. Here is the last move. The CD will be the BD of 2023, that is the our year 3. So this CD will be the BD of the year 3, that is 64,000. So the accumulated depreciation account, this CD will be the BD of the next year. That is the BD of the next year. That is the 23040. Okay. So the third year depreciation expense will be the. So here is the depreciation expense for the third year. So the entry will be depreciation expense debit and accumulated depreciation credit by 8192, 8192. So here is the depreciation expense. So we debit the depreciation expense 8192. So the depreciation expense debit 8192 by reference the accumulated depreciation, and accumulated depreciation is credit by 8192 by reference, by giving reference the depreciation expense. Okay. So now close the accounts. So here is the our last closing movement. Now BD, so here is the carry down balance of year 3. The assets carry down balance is the 64,000. So here we close the accounts. 64,000 by closing by mentioning two diagonal lines, parallel lines, sorry, for closing the accounts. Okay. So you have to add this and just tell me the carry down balance. Well done. 31232. Okay. So this is the carried on balance of the accumulated depreciation account. So we have to close this. That is 31233 debit and 31233 credit. Okay. And the okay. Okay, 232. Oh, it's a difference of just only rupee 1. It's okay. No problem. So it's 230 to 232. Okay. So we have to close this depreciation expense account by 8192, 8192, and the balance will goes to the profit and loss account. The balance will goes to the profit and loss account 8192. So this is the entire questions of depreciation, and we have to we maintain the three accounts simultaneously, that is the fixed assets account, accumulated depreciation account, and depreciation account. Now let's now see the magic. Now see the magic of these accounts. So here is the entire question I solved here. This one. So this one is the entire question. So if I ask a question, total depreciation of 3 years. What is the total depreciation of 3 years? Your answer should be, sir, 1 to 800 year 1 depreciation. Sir, add 10240. Sir, add 8192. Add 8192. So this is the total depreciation of 3 years. So what's the answer? 31,002. 32. So this is the beauty of maintaining accumulated depreciation account. So the accumulated depreciation account tell us at the year end, at the third year, your total depreciation will be the 31232. Got my point? So this is the reason why we make the accumulated depreciation account. So the accumulated depreciation account will tell us the total depreciation during the year. So year one, the total depreciation is 12,800. Let's see this. At year one, the total depreciation 12,800. At year two, what will be the total depreciation by adding these two depreciation? The accumulated depreciation tell us that at the year two, the total depreciation will be the 23040. Look at this. By adding this, your answer will be 23040. That's why we make this account. Okay. Now the last step is prepare extracts related to profit and loss extracts and balance sheet extracts. So in the next class, I will show you how to make the extracts related to profit and loss and statement of financial position. So extract is nothing uh, of profit and loss account. So at the year one, 12,800 will go to the statement of comprehensive income. Year two, this amount will go to the statement of comprehensive income, and year three, this amount will go to the statement of comprehensive income, that is the profit and loss account. So year one, this account, year two, this amount, and year three, this amount. So in the statement of financial position balance sheet, which amount will go to the balance sheet? So here is the answer. So this is the cost, this is the accumulated depreciation. So we subtract 12,800 from 64,000. The answer will be the carrying amount. So this carrying amount will go to the balance sheet. Okay. uh, let's make it uh, statement of comprehensive income, profit and loss extracts for year one, that is 2021, I think so. 2021, 2022, 2023, and here is a extract of statement of financial position, that is the balance sheet. So the balance sheet will be the 3 year also, 2021, 22, and 23. So here we can write the depreciation expense only, and in the statement of financial position, we will write the carrying amount, also the WDV amount, carrying amount of machine. Okay. So this is the one. The first one is the year one. The depreciation expense for the year 12,800, 12,800, and year two it will 10240, 10240, and year three it will 8192. So here is the 8192. Okay, got it. So what is the carrying amount? It is the extract of statement of comprehensive income, profit and loss extracts. So only depreciation expense will go to the profit and loss account. So here is the extracts of statement of financial position, carrying amount. So 2021, what is the carrying amount? Here is the cost. Here is the accumulated depreciation. So we subtract cost minus depreciation. The answer will be the carrying amount. Okay. So 64,000 is the cost. uh, Carrying amount, the formula of carrying amount is uh, cost minus accumulated depreciation. So the cost is 64,000, and the accumulated depreciation is 1 to 800, 1 to 800, and here is the answer. This amount will go to the 2021 statement of financial position. Can you tell me the answer? So here is the amount 51,200. And the next amount is 2022 cost of machine is 64,000 to remain as it is. Like you can see this year 22 cost is 64,000 and the accumulated depreciation 23040 and the answer will be the 42960. So in year 23, the cost of machine remains 64,000 and the accumulated depreciation for third year, that is the 31232. Accumulated 40,960. Okay, it's not 42, it's 40,960. Okay, it's 40,960. Okay, the accumulated depreciation for the third year 31232, 31232, and the answer will be yes. So this is the extracts of statement of financial position, and this is the extracts of statement of comprehensive. Any questions, student, regarding this? You can ask. No question. Okay, you have to revise this question again. Okay, if you face any problem, you can ask. Okay. Okay, student. Take yourself. Thanks for joining. You have to revise this question and solve your homework. Okay. Allah Hafiz.